Welcome to another S&P 500 analysis. Today is August 5th, 2022. Last week, it seems like the S&P 500 was frozen while it waits for the jobless claim and the non-farm payroll numbers. It put in the smallest range since last December. So what does that mean for the coming week? In this video, we'll look at the market sentiment, the market internals, and the price action of the S&P 500 along with the other major market indexes, and see what they are telling us. Stay tuned. Before I begin, let me remind you that I will post a separate video on Sunday where I will show you the levels and the scenarios I will be watching next week for the S&P 500 ETF, the SPY, the NASDAQ 100 ETF, the QQQ, and the Russell 2000 ETF, IWM. And if you like the contents in this video and you have not subscribed to this channel, click the subscribe and be sure to click the thumbs up to give it a like and to help me promote this video on YouTube. As a bonus, I will show you a possible strategy for you to explore on the last S&P 500 weekly candle using its ETF, the SPY, in this Sunday S&P 500 Trade Watch video. On this weekly chart of the S&P 500, we see last week the range for the S&P 500 had contracted from 229 points to less than 88 points, but it did gain 15 points or 1/3% for the week. It also closed above this flat 10-week moving average and underneath this 40-week moving average. It almost made a higher high, but until it does, the price pattern remained to be in a lower high, lower low with a one-time framing up. We also observed that it broke above this declining price channel, but until it makes a higher high and a higher low, the weekly trend continued to be down. Looking at this sentiment chart, the VIX is above the 20 level, and it closed Friday at 21.15, and that is only slightly less than the last Friday close, where it was somewhere around 21.33. The put-call ratio is just slightly above the 0.75. It closed on Friday at 0.78. Once again, the market participants are still a bit cautious. Looking at the internals, the up-down volume ratio was unable to get above 2, even on a Wednesday where it had gained over 1.5% for the day. And the daily advanced decline was also pretty mediocre. And on Wednesday, the rally only attained 1,272 more advancing issue than declining issue. So very narrow market participation on the upside and on the downside last week. And the New York Stock Exchange new high, new low didn't do much differently, except it showed a new high outnumbered the new low on Wednesday by 3 stocks. Other than that, it was pretty much subdued. It didn't get any higher than 20 for the entire week. The New York Stock Exchange cumulative AD line continued to move ahead of the S&P 500 and flashes a positive divergence. The NASDAQ market up-down volume ratio looked a little bit more alive than the New York Stock Exchange, but the daily advance and decline was not any better than the New York Stock Exchange. It too showed the NASDAQ lacked market participation on both sides of the market. And the NASDAQ new high, new low was also relatively subdued, other than on Wednesday, the new high outnumbered the new low by 20 issues. The NASDAQ cumulative AD line and the NASDAQ 100 is moving hand in hand, so there's no divergence. The sentiment is showing market participants are still being cautious, and the internals are telling us the market was pretty ho-hum last week, and the weekly range from the S&P 500 attests to that. On this daily chart of the S&P 500, the S&P 500 is still almost 14% below its high. Also notice the price broke this declining price channel and tested the resistance zone up near this 4180 level. So for next week, we'll watch to see would it be able to make a move above this resistance zone and get above the 4200 and put in a higher high then move toward the next potential resistance zone near the 4270 area. And if it is unable to move and stay above the 4200 level, then look for a possible move back to this gap fill zone and possibly test this zone here near the 4000 level. On this daily chart for the Nasdaq 100, we see the Nasdaq 100 is still in a bear market territory. It is still down more than 21% from its high. Last week, it broke above this declining trend line and also above this 38.2 Fibonacci retracement and the resistance zone near the 13,000 level. For next week, we'll continue to watch for the upside move toward this resistance zone near the 14,000 level and see will that take itself out from the bear market. Now, if it is unable to stay above the 13,000 level, then look for a pullback to this gap fill zone near the 12,300 level. On this Russell 2000 daily chart, we see it has moved up above this 38.2 Fibonacci retracement and into this resistance zone near the 1935 level. And it is just less than 2% away from being out of the bear market territory. So for next week, we'll continue to watch for a possible move toward the price zone up above near the 2100. And the downside scenario is a pullback to this gap fill zone near the 1850 level. The Dow Jones Transportation was out of the bear market for a brief moment on Monday, and on Friday was only 0.07% away from being out of the bear market. It is still holding a slight higher high. Now for next week, we'll be watching to see will it continue to move higher and push itself toward this 15,000 level and near this downward trend line. But if it decides to pull back, then watch for possible support zone at this price level near the 14,000 area. For the Dow Jones Industrial, it's stalled on its way up toward the price zone near the 33,000 level. So for next week, watch for a continuation move toward this price zone above the 33,000 area and see could it get above that and move toward this trend line near the 33,500. And that will put in a higher high for the Dow Jones Industrial. Now, if it decides to pull back, then look for the price zone below near the 32,000 level for potential support. On this daily chart for the New York Stock Exchange Composite Index, we see that it is still holding above this double bottom pivot. We could see a quick dip down to backtest this pivot level near the 15,000 area before it continue to move up toward the first leg of the major move of this double bottom pattern, and that would be near somewhere around the 15,600. If it is unsuccessful on backtesting the double bottom pivot high, then look for a deeper pullback, possibly to the 14,800 level down near this price zone. Looking at the 10-year yield, we see a dip below the 2.6%, then bounce back up to 2.8%. This bounce was mainly due to the better than expected job number from the non-farm payroll reported on Friday. I would expect the 10-year yield will continue to rise with the expectation that the Fed will continue to be aggressive on raising rate to fight off inflation with what they perceive as a strong job market. I will elaborate about how I decided to take a short position into the NFP, the non-farm payroll number, in my summary at the end of this video. We saw the dollar pull back below 105 and then bounce back up and continue to hover near this 106-107 level. We'll keep watching for an attempt to break out from this trend line and move back up to the 108 area. Crude oil was unable to stay above the 97 level. It looks like it might be coming down to test the February 2009 low near the 85 area. Silver encountered resistance near the $20.40 level. We'll continue to watch if it could get above this level here, or would it dip back and possibly come back down to test this $17.80 area. Gold made another attempt, try to get back above the 1800 level, but it encountered resistance and pulled back below it. So for next week, we will watch to see would it be able to make another attempt to get above this 1804 level and try to make it into this price zone near the 1846 level. If it's unable to do that, then we'll be watching for a possible move back down to maybe do a back test near this price zone near the 1716 area. In summary, the S&P 500 experienced the narrowest weekly range since last December. The market internals are not showing much life on either side of the market, and the market participants are still cautious. As with all previous narrow range, it will likely follow with a wide range move, either on the upside or on the downside. With the recent price action, it appears to be in favor of the upside more than to the downside. But just remember, anything is possible, and that is why we present both the up and the down scenario with potential price level to watch for every week. I will present a more detailed analysis on possible trade watch scenario for the S&P 500 using the ETF, the SPY, in my S&P 500 trade watch video, which I will post on Sunday. So be sure to turn on the notification so you will be notified when this video is posted. And before I end this video, let me tell you about my thought behind taking a short position into the non-farm payroll number. We know the Fed was saying the last 2 quarters of declining GDP do not mean the U.S. economy is in a recession because the job market is still strong. And the Fed is determined to raise rates until it sees substantial decline in inflation. And it believes with a strong job market, the economy will be able to absorb the rate hike without falling into a recession. So if the non-farm payroll number came out good, then it will reaffirm the Fed to continue with its aggressive rate hike policy, like 75 basis points or even 100 basis points, and the market see that move will increase the odds that the Fed will push the U.S. economy into a recession and also increase the chance it will break something, and for that, the market will act negatively with a strong non-farm payroll number. Then on the other side, if the non-farm payroll came out bad, then the market will see it because the economy is falling into a recession, and the Fed cannot stop raising rates and let inflation keep going higher. And this will cause the market to react on a downside as well. So as you can see, both sides of the non-farm payroll, from my thought, will result in a negative reaction from the market. And that's why I took a chance and initiate a short position going into the number. Now, don't forget to smash that thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.